This brick, which is gripped by my fingers, which shoot out from my hand, which is fastened to my arm, that meets up with my shoulder, that sits well below my head, that surrounds my brain, which is tied up with thoughts of resentment, fear, and loathing because of your using me in your road to wealth and power, will crash through your picture window and kill you. We gon' put you in the squeeze. We gon' put you in the squeeze. The city is a planet, a glass and granite, and it's ran by some masters of mechanics. We got schools where the facts are vanished. We got scams where your stacks are vanished. And the hospital, it's gon' cost you racks, so panic. All the gangsters throw your triggers up. All the stoners throw your flickers up. All the drugs throw your liquor up. All the bank tellers stick 'em up. Teach them babies how to grip a buck when this hits the streets. Is thunder with thesis. We'll show where the beast is. Make sure with deceases. They smolder with speeches. We shoulder the leeches. Call off the polices. This ain't where the thief is. Janitors work all night like Dracula. Burger flippers grab your spatulas. Managers get your Acuras. Big bosses got your sack because we'll put them in the squeeze. We gon' put you in the squeeze. We gon' put you in the, we gon' put you in the. Well, poverty has just gone platinum. Unemployment checks need to come with the gat in them. Changing leather with slave masters still cracking them. This is where I'm scatting from. Listen to the battle drum. We all got our shackles on. Ladies, shoot your deuces. Bankers tip your masseuses. Wardens tighten up your nooses. Motherfuckers make noise if you bought your clothes boosted. The earth is composed of space and atoms and controlled by some pimps without Stacey Adams.
Hey, it's Soleil, and this is episode 330 of the Orange Pill Investor. I reset my damn AirPods, so that's why I couldn't get them working. Got to get those connected. So let's go. We're back. I don't know if this counts as a squeeze, but I will take it. Up 7% for the day, and like, what is it, like 20% for the week? Something like that. Let's check. Yeah, just about 20%. So I know I know Ben said his favorite episodes are, watching me squirm and try to fix all these covered calls that have gone against me. So he's gonna love this one. Again, I'm probably up 25, maybe, yeah, 25% for the week. So yes, a bunch of my upside was limited. You can see that all of these are in the money and completely destroyed. But implied vol is not even really like blasting or anything. So this could be the beginning of something cool. If we can get a nice inauguration Bitcoin pump over the weekend, maybe. Or I don't know, it could be an okie doke and it we get faked out. So let's just do what I always do. Well, before I get into that, let me just check the chats. What's up, Scott? What's up, Howard? Are we going from gamma squeeze from gamma sneeze to gamma squeeze? Maybe. What's up, Jeremy? What's up, Wade? Andrew? Master of Coin. Love that. Willip. Jeremy. What's up, Anders? Valhalla, I'm coming. Yeah, I would love nothing more than to have a nice squeeze. But I don't know. And I guess that's why I'm always kind of hedging my bets. And I'm going to go ahead and clean all of this shiz up and then see how much margin use I have to take care of. And then we'll see about putting on some new positions. It's definitely a green day, so it's gonna be an even better starting place to add some of these positions, even though, yeah, I mean, I would love it to see it go to 450, 500, something amazing. But yeah, I just don't know. So we'll see how this shakes out. But again, I'm glad I didn't roll these at the first sign of pressure because if I had rolled these out to January 24th or rolled them to a higher strike, those strikes would just be getting blown out too. And so on Tuesday or Wednesday, if I had paid to roll these 315s up to 350, then I'd still just be paying to close this now. And on Wednesday, I would have had to have paid to roll up all of the extrinsic value. And now I can just go ahead and close these. And the only thing that I'm going to have to pay is the intrinsic value. So let's just double check and make sure that that's true. Intrinsic value is going to be the share price. So 392 minus 315, which is exactly 77. There's no extrinsic value left in this. I don't know, maybe 50 cents or something. Um, and so if IV rank, which is up maybe 30% since last week, which is nice. Um, to close this, I don't have to pay for IV rank. And that's what I meant when I was talking about Vega is the key that I kind of hadn't considered. When you do get blown out, when your strikes get blown out, you don't have to pay for Vega. So if IV rank was pegged at 100, that will affect options prices. If you're long an option, having a huge IV rank is going to be amazing for you. However, at 0 days to expiration, it's meaningless because it can't do anything. It can only affect the extrinsic value. Vega cannot affect the intrinsic value at all. And since this is 0 days to expiration, it has only intrinsic value. So Vega is basically meaningless. However, Vega can pump my April long calls, my June long calls, my December in the money calls, my December out of the money calls, my January 2026 long calls. Vega can absolutely pump my bags on all of those positions. So that's why I don't roll the tested side at the first sign of trouble. And I have to verify this, but I think someone said that that's what MSTY does. Like if their strikes get tested, they roll. And I'm like, fuck that. When you place a trade and that strike gets tested, it's too late to fix it. So I just take my medicine. I wait till, maybe Thursday before a close, if I want to roll early and make sure that no one exercises on me. But I would say 99% of the time, if I come in here and I take care of these positions before noon, I've only been exercised on once the day before expiration. So it's not like the end of the world. But if you're super paranoid, yeah, you could come in here on a Wednesday or Thursday and roll if you don't want to have to let your shares get called away and then just buy the shares right back, create a taxable event. You have to get a new cost basis on your shares. If you want to avoid all of that nonsense, sure, I can see rolling a little early, like one day. But for the most part, I just take my lumps. So this is going to cost me a bunch of money, though. So let's just start closing this stuff. Let me see how many I can close at once. Do 2 of these. Full. And let me turn the sound. Okay, I did turn the sound down. Yeah, 30 grand. That's hilarious. All right, and these other two, let's close these. Another 20. So I limited my upside by like 55,000 this week. And that's what you have to be prepared for. If you can't stomach this happening, then you just have to be a buy and hold person. Let's see, add a little bit more of a debit here. I think I'm chasing the price. We can getting close to 400. Okay, there we go. So I've got to come up with 50 grand worth of profits in order to get out of margin use. So what are my choices? I can either sell shares, which is basically like, that would basically be like getting uh, shares called away. But let's go ahead and take a look at my 45 DTE long call or short calls as well. So these are all going against me, and I would love nothing more than for these to just completely smash 470 by February 21st. If these five go above 470, I will probably go ahead and just close these out with them to pay for however much that costs. But as long as I have these in the money leaps, I will continue to keep at least, bare minimum, I will never have less than 5 covered calls on, because that's these in the money leaps entire sole purpose for existence. I don't care if IV is down, up, I don't care if the price is down or up. There's 61 delta draining out of my account for these leaps, and 359 a day draining into it with the covered calls. So this isn't about the price necessarily. It's always nice when the price goes up. But again, checking intrinsic and extrinsic value, I subtract the current price, so 390 from 470, that's 80 bucks, well, more like 78. And or yeah, 78 bucks. And the price, wait, what the hell am I saying? Sorry, these are out of the money, so there is no intrinsic value. What an idiot. Um, so all of this value is extrinsic, and it's about what, 10% of the share price, and it's about a month and a half away. So what is that, like 2% a week in extrinsic value? So this is a trade that I would literally put on today and be like, okay, that's cool. I'll collect 3,600 bucks on on 42 days, holding 39,000 in collateral. That's a decent deal, and really less than that collateral because the leaps only cost 23 grand, not the full price. So I won't be touching those, but the 470 calls, again, this is a trade that I would not feel bad about putting on like today. So I'm more than happy to collect the 3,100 in extrinsic value against all of these. Again, my strikes are being tested. The price of the stock is going against this trade. So I'm not going to roll these early. If I have to hold them until February 21st, February 28th, and then I'll figure out the damage. I'll do another one of these things, and I'll do damage control then. But I don't need to panic at this point. But I do got to come up with 50 grand to avoid using any margin. So what can I get? Last week, I think I was getting about $1,000 per covered call at the money, and now I can get double that, which is crazy because the price didn't of MicroStrategy didn't go up double. The price of MicroStrategy went up like 20%, but the premiums that I can get at the money are double. So that's kind of insane. The only way that I can come up with, let's see, this is going to be 2 grand a pop. I'd have to sell 25 of them. And if I sell 25 against an account this size, I already have 18. That would add up to what, 43? That would be like all of my would be my entire position covered at that point. Not exactly, because these long calls, if the price goes up to 400, 450, 500, the delta is going to increase, unlike shares. So these 1952, the delta on these shares is always going to be 1952. But if the price of MSTR goes up $100, maybe this delta goes from 400 to 500. So even if I cover all of my delta, it looks like I'm limiting all my upside. But on these long, excuse me, on the long calls, they will actually appreciate because of gamma, and gamma going up is going to increase delta for every dollar that it goes up. Um, as these strikes start to go closer to being in the money. My Aprils are almost in the money. My June 1080s are not even close, but that would be a nice Christmas in July present. But I don't think I'm inclined to sell 25 covered calls, even though the premium is nice. Um, but let's do about 40% of it, and then I will see what I can sell to cover the rest. Let's do 10 of them. Now, the other thing, let me just double check. So the other thing that I could do, I can get 2 grand at the money. Let's clear this. Or I can go out to 42 days to expiration. I've already got the 470s. And if I add 10 more, that's like 35 grand. Or I could even go to the 500s to get the same premium as the weeklies. I can go all the way to the 580, which is almost 50% out of the money. That's kind of sick. So maybe I'll do a little of each. Let's do 5 of the 580s. And 5 of the weeklies at the money. And actually, you know what? Let me do. I should probably do 400, right? That's a psychological number. So let's see, 5 of them. Okay, cool. So that knocked me down to only using 30 grand worth of margin. I could sell some shares, but since the price is up, I would prefer to sell some leverage. Let's see how much equity I have in my Aprils because those are the ones that are closest to needing to roll. Actually, you know what? This is a perfect opportunity. So I'm always running my mouth about not wanting to hold long calls under 90 days to expiration. So this is a perfect opportunity for me to put my money where my mouth is and close all of these Aprils. I can just about, I basically tripled my money. I think in November I could have like 5x'd. So if I had any fucking sense, I probably, should have just closed like 75% of these at least back in November. But let's see, 5 grand a pop, and I need 30 grand. So I'm gonna close. Well, I'm closing them all. Didn't occur to me that I could have just closed all of them, and that would have covered all of my positions. I didn't even need to put those covered calls on necessarily. However, selling new covered calls, sell to open or buying to close a long call, that's like a distinction without a difference, in my opinion. And it's hilarious to me when people who are down on covered calls, they're like, "Oh yeah, I would rather just buy a call." I'm like, "Okay, well, you're just gonna roll it forever?" Like, "Oh no, I'm gonna sell it at some point if it's in profit." Okay, well, you just sold a call then. Well, that's different. No, it's not. You are either taking profits because you're no longer, as bullish as you were when you opened that trade, or you'll just roll the fucking thing forever. Like if you're just bullish forever, then you'll just continue to roll to the 1080s all through 2026. And then if the next strikes that they pull out of their asses are 1500 strikes, 2000 strikes, you'll just keep rolling to those in 2027 and you'll never take profits because you don't like to sell calls. And that's ridiculous. So at some point, you're going to sell a call. I just sell the call first and buy to close later. You can buy a call now and sell to close later, but it's the same damn thing. It's just it's just in the mirror. All right. So now now I have the opposite problem. Now I've got 70 grand. So let's go out. I said I was going to roll April's to May, June, July. So let's see. Let's maybe keep half of those and I'll buy shares and I'll put the other 30 grand, 30, 35 into the, what did I say? Yeah, July's. Okay, so now I'm going to buy. If I was going to spend the whole 70, that would be 20 of them, right? So let's just get 10. It's a nice whole number. And the reason I'm going to the top of the chain is this is where I can buy the most delta per dollar. So I'm getting a quarter of a delta for 3,500 bucks, which is like 25% cheaper. Is that right? In order to get 100 delta, I would need to pay 39 grand. 25% of that would be about $10,000. So yeah, I'm getting this for what? 30% off? Yeah. 0.25 delta should cost me 10 grand. I'm getting it for 35. Now, if MicroStrategy crashes back down to, to 300, these will absolutely get destroyed. So, you know what? I'm tempted to take off even a little bit more leverage. Maybe I should only buy 5 of these. Hmm. And buy more shares. Let's ease my way into this. That's going to cost me 17 grand. And I know I want to buy a bunch of shares, and I've got 1952. So 48 shares to get me to a nice round 2000. Leaves me with 35 grand still. Hmm. Wait, did I buy the Julys? Yeah, there they are. All right, fine. Um, looks like I can get 5 more of those for 35. No, not quite. That would be using a little bit of margin. So let's do 4. Oh, that's not right. How come I can't do math? Okay, now I can pick up a few more shares even. Let's see. I've got 17 grand. I need 20 to get 50 shares. So what can I get? 42 shares? $44? 44? Nope, 43. Come on, give me a fill, damn it. Okay, I like that. That gets me a little bit closer to my 2025 goal of getting to 3,000 shares. I took some leverage off the table. I sold 20 of the Aprils that were in profit. Oh, you know what? I should have taken this off and this off. Too late now. Okay. Took off about took about 100,000 in profit on the Aprils, and then rolled 10 out to July. and spent about 36 grand. So I took profits on 2/3. I took 1/3 and rolling the dice on July. These are now at 182 days to expiration. That makes me feel good. I've got 92 days for these to, um, you know, go to hell or get into profit. So I like that. That was my plan all along. I could have been more aggressive and rolled 20 of these out and spent 72,000 and only took profits in what, 28. But I like taking some leverage off the table. Um, my net theta is positive, so this is about 1,000 a day. Could be considered a little bit overkill, but let's just add this up now. So now I only have 3,400 delta. Actually, that's net delta. Let me just add up my shares. I got 2,043. Might be easier to add up my negatives. So 500, 750, 950, 1050, 1075, 1150, 1350. Yeah, this is a debit spread. Um, so about 1050. So without the covered calls, I would have about 4,400 delta, and I've got 1,000. I'm short 1,000 delta. It's about 25% of my positions. 23 covered calls, right? No, 28, 18, 23, 28. That's not bad. If the squeeze continues and we see, 450, I'll add some more. If we see 500, obviously, I'll be adding some more. So I think I'm cool with this. Let's check chats and go to the next account. Niz says disappointed that we ran up so quick. Wanted to buy more shares between 300 and 325. Yeah, I'm not. I was a little bit demoralized from my failure to capitalize on November. So I've been kind of desperate to get any pump whatsoever just to put my mind right. Dr. Tone says, good morning, Nithu. Going further on our discussion about MSTY dividend capture, that will be interesting. The new account you opened to measure MSTY dividends reinvested comparing with your other account. What about a hybrid account where you go in a few days to MSTY, collect dividends, wait a few days for the price to recover, then go back into MSTR until the next dividend date, rinse and repeat? That way you're MSTR most of the time in a bull market. So the problem with that, and there's a whole strategy around that, and someone linked me um, the strategy, which I have seen before, and I don't think it works. Um, if people are executing it and making it work, good on them. But the theory is that, okay, well, if you know the dividend date, just buy it, the day before the ex dividend date, and then collect your dividends, and then just sell it off and go do whatever the hell you want to do. But the problem with that is you can look at any dividend stock, and shortly before the dividend, the price goes up. So you'd be buying it kind of high, and then, because people are doing exactly what you're describing. So the price of the stock gets bid up before the dividend, and then people dump it after. So uh, I don't think that works. Colin says, can you go over exercising a covered call leap? Sold the 600s 2027. Is it just as simple as collecting premium and selling shares? What about the open position itself and its current value? You might have to give that one to me again. Exercising a Do you mean go over the maintenance of it? Because when we say exercise means I have purchased a call or a put, and when I exercise it, you if you bought a call, you're saying, "I want to buy 100 shares at that price." Um, so you're saying you sold the 600s, you sold the 600s in 2027. Yeah, please explain that because, I never sell covered calls beyond 45 days to expiration. If I really need to roll for a credit, I may go to 60. And the reason is because let's just look at the 600 strikes in 2027. So you can get some enormous credits here, right? Sounds great. I can get $15,000. However, theta is so tiny. So what you said your goal is correct. Is it as simple as collecting premium? Yeah, but you need that premium to drain into your account. And this is only draining into your account 13 cents a day. You're going to have to wait a freaking year to get 10% of this. And then the last 90 days, you get the rest. So, um, I would only ever do this if I had like an oh shit moment, like, holy crap, I need just this huge number to pay taxes or my fucking house burned down and I didn't have insurance or something. And like, this is the only way that I could just dig myself out of some giant hole is I, needed to sell like 10 of these to get 150 grand or something. Um, but yeah, if that's what you're describing, I simply wouldn't set them up the way that it looks like you're describing them in the first place. So it's going to be hard for me to give you advice on that. And I'm also confused about your use of the word exercise. What's up, Jesse? Jesse says, my understanding is MSTY spot price drops by an amount declared by the dividend. Yeah, that's exactly my thought on it as well. If that was an effective arbitrage, everyone would do it to the point where it's not, it's no longer effective. So, if you can find a glitch in the matrix and you can get that to work every so often, please jump on it. It's like free money, but I don't think it's going to work. iBill says exactly true. MSTY share price performance over the past 2 months is pretty poor. Also, it does not recover at the same rate as MSTR. So, um, I noticed that as well. And when we covered it, I think it was 2 weeks ago, I mentioned that. But what I failed to give MSTY credit for is most people do, I think it's a DRIP, dividend reinvestment. I don't forget what the IP stands for. Um, but if you take the 10% dividend payment and then you immediately buy more MSTY, then not just 10%, but you're going to have the new shares that you bought. And then the third month, you're going to get 10% on top of the 10% on top of the 10%. And your gains over a year If you just put it into the calculator, if you take 1.1 and you raise it to the 12th power, assuming that you're going to get 12 dividend payments a year. And actually, I think they do every 4 weeks. So it's 13 dividend payments a year. So it's actually even going to be a little bit better. Uh, but 10% a month for 12 months works out to actually like a 3x. So it comes a little bit closer to holding spot MSTR's profits. So, but you're paying them a management fee. So I always just assume that a management fee will make me underperform. So I just don't like them. I don't like paying management fees. Um, that's adding friction to the system. So I don't see how a system with more friction can deliver me more more power. Uh, it just doesn't make any sense to me. So, um, however, I haven't done it yet. So I will need to request Tasty Trade a new account. So I would end up with a new account number. But what I think I will probably do is turn this IRA into the MSTY account. So maybe I'll just dump all of these. And then the new account, I will transfer over an equal dollar amount. And then I'll start the challenge and I'll take MSTY, and then whatever dividend payments they get, I'll just buy more MSTY and do that for maybe, I would say for a year, but I'm 6 months would probably be enough, or maybe through October. I'm gonna assume that the majority of the bull market is over in October, and I'll be winding down my positions then. So maybe do like an 8 month, 9 month, 9 month challenge. But it'll take me a couple of weeks, and it's gonna suck a little bit too because I'm either gonna have to sell positions and go to cash. That's the easiest way for me to transfer money to a new account, but that's a little bit of a pain in the ass. But the way that Tasty Trade works, if I want to transfer shares, I have to like fill out a fucking piece of paper. So we'll see. It's gonna be a little bit of annoying uh, to deal with. Heath says, "Do you ever sell Leap puts for cash?" No, and it's for the exact same reason that I was poo-pooing selling covered calls beyond 45 days, because it's the same thing. So selling a covered call at the 600 strike in 2027 has a tiny, tiny theta. You know, contrary to popular belief, size does matter. And if I'm selling even at the money puts, that theta is the same. I can get this giant number, but I don't get to keep any of it for a year. That's the thing. You have to wait an entire year to actually have this fully realized. And that just doesn't make any sense. He says sell puts against margin line, no interest expense. Against margin line. You have to explain that one to me. I can't tell if that's using margin or not using margin. Forrester, what's up, brother? Looking forward to talking to you next week. Forrester says, I'm bag holding MSTX with a break even price of 111. Throw a date at me when it crosses that line, please. Send emotional support. All right. Well, everybody's rooting for you. Hopefully that's straight shares. Owning long calls in MSTX as irresponsibly long as I am, that would scare the shit out of me. But what is MSTX right now? Oh, 111 break even. Oh, that's brutal, dude. You FOMO'd in around here. Oh, Barry says, "Hola, happy to be here. Glad to have you." All right, Alex says, "I presume you run a simple option wheel strategy, selling covered calls when implied vol is high and selling puts to acquire more shares and maybe gamble a bit with buying crazy cheap out of the money calls with a far out expiration date from the covered call premiums. Buying crazy cheap out of the money call." Yes. Can you roughly tell us how many more shares were you able to acquire with this strategy and from what baseline? Doesn't have to be exact, just like I started out with mid three figures of shares and now I am whatever 4x that. So pre-split in March, I had 300 shares of MSTR. Let me just take a look. And but see, that's not quite fair because I can't remember if I was using margin. I think I had some of that on margin. Um, but right now, at current prices, not using margin, I could probably get all of that back, actually. Um, but what happened to me in March was so imagine that these are all 10x prices. So I had 300 shares. The price was 1200, I believe. So that would have been right about here. And I sold the 1400 strikes and it went here to like 1700. So I ended up letting 100 of my shares get called away. And I've been basically fighting ever since then to try to get those shares back. And it looks like I'm basically there. My IRA never really recovered because I had 100 shares in MSTR and I could probably only get about 50. No, sorry, 500 shares. So I had 100 shares pre-split, which would be 1,000 now. I could probably get about 500 shares of MicroStrategy at this point. So, but March is when I altered my strategy. In March, I only traded in shares. I had no long calls. So exactly what you're describing is what I implemented after March. So I would say that all right, let me just read your question again. Can you roughly tell us how many more shares you were able to acquire with this strategy and from what baseline? Yeah. So if I start after March when I got wrecked and I ended up with like 200 to 250 shares, then I could probably over the past 9 months I've clawed my way back up to my pre-call away value of about 50 pre-split shares. So that would be 500 post-split shares. So in 9 months, I guess I have, if I just went to cash and bought shares, I clawed back the 500 shares that I lost. In November, if I had gone to cash, I would have ended up with 4,000 shares. So I would have been able to increase my shares by about 1,500. But I missed out on that. So I'm hoping we get another nice squeeze like what we had when in November when we went to almost 500 a share. If that happens, then I could probably increase my shares by about 50%, I suppose. Maybe even double the shares. So that'll be nice. But yeah, March was an eye-opening experience because I just didn't realize how fast MicroStrategy could rip, and so I was not protecting myself with long calls at that time, and that's an adjustment that I made after March. So before March, the wheel strategy lost me shares overall. My account was going up in dollar terms, but it actually went down in March in share terms. And since then, since as you said, I started using the premiums that I was collecting to buy long calls, out of the money long calls, I was able to reverse that. Now, the only reason that that worked is because we've been in a bull market the entire time. That strategy in a bear market would have been absolute suicide. So you can call that luck if you want. Hopefully that answered your question. Oh, maybe I didn't. Let's see. Doesn't have to be exact. Just like I started out with mid three figures of shares, and now I am whatever 4x that. Yeah, that's fucking awesome, dude. I need to get on your level. What's up, Anders? Anders says margin loan 12% annualized, MSTY dividend 100%. Interesting ARB opportunity as long as you can afford the loan. Yeah, and as long as the bull market continues. I actually think that MSTY could outperform MicroStrategy in the bear market. It almost seems like there's no way that it wouldn't outperform, because if MSTR is going down with no downside protection and MSTY is going down with downside protection, um, that just makes sense to me that MSTY would underperform in a bull market and outperform in a bear market. But yeah, you just have to make sure that the dividend continues to exceed the 12% annualized. And as bullish as I am on MicroStrategy, it would take a black swan event type thing in order to wreck that model. So yeah, I like the way you're thinking with that one. Na says, do you have an exit plan or are you holding forever? And then let's see, can you help me understand why long-term calls for MicroStrategy are better than short-term? Well, when you say long-term calls, do you mean purchasing them? It says, I'm trying to get calls before the inauguration because I feel that Bitcoin will make all-time highs, but I'm confused. Why not doing calls that expire in 2 weeks? Okay, so you're talking about buying calls. So anytime that I'm saying something, I'm never saying it's better, and I'm never saying that it's worse. Everything is a trade-off. So when I was saying I never calls and puts out to frickin', next year because theta is so tiny, I generally look at buying calls from an option seller's perspective, and that's why I am very hesitant to buy calls for next week, because look at theta. Theta is only, for those ones that are a year out, it was like what, 13 cents? And it's 10x. So theta is an order of magnitude higher for next week than it is for next year. You have to be right so fast. If you've got some insider information and you're like in Trump's cabinet and he's going to announce the most bullish fucking strategic Bitcoin stockpile, like more bullish than anything anyone can imagine, and you just know that the price is going to go up, okay, place that bet. But the money is motherfucker. Did it say session has been invalidated? All right. Next week, especially like an out of the money option, right? If I'm buying 400s next week, this whole entire 2 grand is out of the money. It's all extrinsic. All the extrinsic value it must drain out and become 0 by next Friday. So not only would you have to get to 400 a share, your break even is actually 400 a share plus the 20. Your break even is 420 before you can even get back the money that you spent. So that's why I am very hesitant to buy them. Now, I was planning if, you know, you know, Josh was kind of hoping that the price yesterday would be 325 a share, and he had this, you know, this whole setup. Like if that happens, we could be getting this massive squeeze, and it looks like we got a mini squeeze, so that's cool. But if I had bought some at the money calls yesterday, what was it at 360 or something? I'd probably be in profit right now. But it's just so hard to be right fast enough when you're buying something for 2 weeks. But like I said, everything's a trade-off. So on short-term calls, as a buyer, theta is amazingly bad. But as a seller, it's amazingly good. So that's why I sell covered calls a week, 2 weeks, 45 days. But the reason why I don't say that one is better than the other, it's all about what your goal is. So buying a call for next week has huge gamma. And so if the price does rip up $50 in your favor, you're going to get massive gains. Whereas my little, you know, the gamma on my Aprils, let me just say Junes, because I have Junes in the IRA. Gamma on my Junes is much smaller. So if we get a $50, $100 rip, my 1080s will do well, but your 7 days to expiration would just go to the moon. So it's a trade-off. Do you want exposure to, the potential to win the lottery? Okay, do next week or the week after. But I do not hold my hopes on any of these binary events. So earnings calls, binary events, uh, inauguration day and executive orders, binary event. This being a historic, I'm doing air quotes, but this being a historic expiration day today, that's a binary event. Binary events can be great, or they can go to hell and you can get completely wrecked. So, yeah, that's why I don't buy calls for the most part under 90 days to expiration, because as an options seller, I consider that to be prime selling territory. That's when I start licking my lips and I feel like I'm taking advantage of the buyers. Now, clearly, I sold what did I just pay? I think I just paid like 50 grand, right? So the strategy that you're suggesting last week worked out fabulously for everyone who bought my calls. So all of the people who bought my 315s last week, all the people who bought my 325s, my 330s, my 350s, the people who bought all of those calls last week did great. Some of them maybe even like the guy who bought the 315s, he might have 10x'd his money. So, good on him. But 5 or 10x. So you can make money like that sometimes, but you can also lose a shitload of money. And I think more often than not, those are losing bets. So, by all means, if you want to scratch off a lottery ticket for next week, that's fine. But that's not how I do it. Charlie says, "What are your thoughts on selling zero point 0.1 to 0.15 delta covered calls on a third of my shares starting late summer?" So I don't have a problem with exactly what you're saying, but 30 days, according to Tasty Trades research, is not optimal. 45 days to expiration is optimal for out of the money covered calls, which would be exactly what point 0.1 to 0.15 deltas are. I know some people religiously, and some people who do very well, religiously sell the point ones. I am agnostic about the delta. So I don't care if I'm selling point 0.1, point 0.2, point 0.3, whatever. I don't believe that there's a theoretical edge in any particular delta. So I really just don't care. But I try to follow Tasty Trades research and try to give myself every mechanical advantage. So that's why I wouldn't sell them at 30. I would sell them at 45. The theta acceleration curve, reaches its maximum acceleration according to Tasty Trade at 45 days to expiration and lasts about 2 to 3 weeks. So somewhere in the 2 to 3 week range, if I can buy it back for half of what I sold it for, I would roll it out to 45 days again. That's kind of textbook Tasty Trade mechanics for out of the money options. And you can say, well, wait a minute, you sold 5 for next week, 7 days to expiration. Where are they? There we go. I sold the 400. Those are basically at the money. These are what, like 0.5 delta? Yeah, this is a coin flip. So 45 days is optimal for out of the money options, mechanically, not theoretically. But if I'm going to sell weeklies, I might as well just do it at the money because the theta acceleration curve is maximal at the money for weeklies. And it kind of makes sense. Like there's only a week. All the extrinsic value has to leave this in 7 days. So while you can trace the theta curve over 45 days, with only 7 days, it's just kind of like a straight line. Just all the extrinsic value. But it's also a little bit weird. I would say probably there's only 5 trading days if I ignore the weekends, but it almost seems like you'll get, if it was every day was the same, it would be 20%, 20%, 20%, 20%, 20% for 5 trading days. But that's not usually how it works. For the very last trading day, it seems like on Thursday there's like 30% left. So it's more like 15, 15, 15, 15, and then like 35. And so that's why I was even selling some covered calls yesterday with just 1 trading day. And those were at the money. Those got wrecked too, but it's beside the point. Jesse says, this is a good play in my opinion. If you feel confident that MicroStrategy will continue to optimize for volatility, then you could make loan payments with dividends and eventually end up with MSTY shares that paid for themselves. Yeah, I love that. But then the other part of your question, Charlie, where you said a third of your shares starting late summer. So you're basically assuming that the bull market will be over at some point late summer. So that's when you're figuring to do it. The other metrics you could watch would be IV rank. So, if we get another spike and IV rank is over 50, 75, pegged at 100, those are good entry points. So I'm not necessarily like planning like, oh, okay, I'm going to start selling covered calls in August. What if the price of MicroStrategy is down in August? What do they say? Sell in May and go away. So what if I don't know. I think Adrian's got a good seasonality chart. And I can't remember which months are historically red and which ones are green, but what if June, July, and August are all shit for Bitcoin, and then you start selling covered calls in August at the bottom, and you miss it ripping in September? So I would I would always tend to try to open up covered calls on a green day. So, today we're up 5-10%. That's kind of nice. Ivy rank is up a little bit. So you can ballpark your window like, okay, here's my late summer entry point, and then, watch for a rally. The as soon as you get a rally in your trade window, maybe open them up then. But yeah, I don't really care which deltas I'm selling. I just want to sell them at the days to expiration where I'm going to have maximum advantage. Elliot says, "What's your strategy in your IRA account? Is it just exclusively holding Misty?" So this is my IRA account right now. I haven't been using Misty at all. It's just something that I proposed that I would do to just as a fun challenge to see if I can beat Misty. And my IRA would be a perfect place to use it because, from what I understand, dividends has some of the worst tax treatment possible. I think it's like, I don't know, somebody said something along the lines of the tax gains, you don't even get the same credit you would get just, taking capital gains in other ways. Yeah, I don't know jack shit about taxes. I just do whatever TurboTax tells me to do. But I've heard rumors that dividends has the worst tax treatments. So if somebody knows the answer to that question, please put it in the chat. Um, but that's the whole point is if I'm going to have a little competition, I would prefer to put Misty in my IRA. So I would just close all of these positions and just load up on Misty and not give a shit about the taxes. AI Gone Wrong says, I don't think Nithu touched the put side. I see it as a diagonal spread. Yeah, so the wheel is how I got started, but for the most part, I kind of stopped the selling the put side because the profits are the same. The profits in selling a put versus selling a covered call, they're basically the same. So it doesn't matter which half of the wheel you're using, or if you use both sides of the wheel, because the profits on both sides are going to be pretty much similar. Except that when I sell cash secured puts, I'm always doing that on a stock that I don't mind holding. So I almost always sell 7 days to expiration at the money cash secured puts and just collect the most premium I can. Now, sometimes that gets me into some short-term trouble. Like when I started the 5K account challenge in this Robinhood account, I bought CLSK in March when Bitcoin was at all-time highs. So my cost basis on CLSK when I was selling puts was like $13 a share. And then it promptly went down to, sorry, actually it was probably 15 a share, 15, 20 a share. Then it goes down to 15. It ping pongs me around. And, you know, my cost, the cost of my cost basis here was like 13, 14 a share. And I owned, I don't know how many hundreds of shares when CLSK was at $8 a share. So yes, collecting premium reduces your cost basis, but if the share price drops by 50%, there's no amount of premium that's going to save you from your portfolio going down, which is why I started in March with like 5 grand, right? I was buying all of these mining stocks at all-time highs, and within a month, my 5 grand was at 3 grand, under 3 grand. But that's kind of the whole point of the wheel is you're reducing your cost basis on the way down, you're reducing your cost basis on the way up. And, over months and years, as long as your account's going up and to the right, then you're fine. Dude face, I was just a little ahead of you in my thinking. I focused on just accumulating shares since January. I bought into MSTY when it first issued. Interesting thing about MSTY is it has a small options chain. Yeah, and actually, I'm not giving anything away because he covers it on his channel, but Bitcoin Not Crypto actually covered that. I think he was selling covered calls or something on his MSTY positions, which I think is hilarious because it's already a covered call strategy. So you're like, it's like covered call inception. You're you're uh you're selling covered calls on covered calls. You can't get much, but you could kind of say it's a little gravy on top of the dividends, right? You own 100. So, but just to be clear, you're not going to run the wheel on MSTY because if you sell a cash secured put, you can't get dividend payments on a cash secured put. I think you actually might be able to collect a little bit more premium with a cash secured put. For some reason, I feel like the dividend might be built in, and there's a little bit of a skew between the calls and the puts on dividend stocks. But please do your own research and make sure I'm not full of shit on that. I generally don't trade dividend stocks at all. Um, but yeah, I mean, if you got 100 shares of MSTY, you're already collecting dividends. And if you sold what, the 35 strike. Now you have to be careful though, right? Because let's just say it's the day before dividends are going to get paid out and you sold the 35. If the price is like, even if you're like, oh, I'm safe, the price is only 34.50. If the dividend is greater than the distance between the share price and your strike, you will get your ass exercised on because they will snatch your shares right before dividends. And then, 10% of 35 is 350. So they might exercise on you if the price, if you have the 35 strikes, they might exercise you on you at like 31.50, $32. You know what I mean? You're like, oh, I'm safe, right? The price is only 32. I got the 35s. No, they can exercise on your ass, collect the 10% dividends. That would that would put them at 35.50, and they can get that little 50 cent per share. I don't want to call it arbitrage, but it's just a little scalp. So be careful selling covered calls on dividend stocks because right around X dividend date, if your strike is within, pun intended, striking distance of the anticipated dividend, motherfuckers will exercise and snatch your shares right before the dividend is paid out. So yeah, you can milk it for a couple little extra here and there, I suppose. But ETFs generally have low option premium. Now, obviously, the leveraged micro strategies are an exception to that because they're just vol on vol. But a dividend stock, the volatility is muted. But hell yeah, if you're going to own 100 shares and you want to sell the 35 strike and you're already making, what is that? If it goes up from 30 to 35, 20%, whatever, 15%. Even if your shares get called away, going up 15, 20%, you kind of can't complain. You missed out on the 10% dividend, but you made 15, 20% on the, getting your shares called away. That's a good problem to have. But yeah, and they don't have weeklies, so the options market on a dividend stock is not going to be as lively. And I don't know what the liquidity on these things are. Actually, there's a good amount. So the bid ask spread is fairly tight. I mean, 10 cents wide is not like super amazing. I would prefer 5 cents wide, but 400 volume, almost 1,000 open interest. It's not the worst options market in the world. Dude Face says I'm 4/5 MicroStrategy, 1/5 MSTY in my MicroStrategy position. Finally started writing calls on my MicroStrategy with just 100 shares. So far in a month, I've brought in 8 shares. I'll take it. Yeah. Congrats. What's up, Dill? Doing great. The knowledge you provide is just unreal. Is it too self-serving for me to show that comment just so that I can bask in my greatness? Appreciate it. Appreciate it, dude. Nis says, do you only sell 45 days expiration or weeklies as well? I actually split the difference just now. So I put on 10 new positions. I sold 5 at the money. So my weeklies, I'm being much more aggressive with the premium. But with my 45 days that I put on today, I actually collected an identical premium. I collected $2,000 for the at the monies. I collected $2,000 for the out of the monies at 42 days to expiration. However, with the 45 days, I only expect to collect half of this in 2 to 3 weeks, which would mean I'm not collecting $2,000 a week here. This is like the best I can do is $2,000 in 45 days, whereas here I'm collecting $2,000 in 7 days. So in 2 weeks, if I can buy this back for 1,000 and then sell it again for $2,000, that's $500 a week, which is only 25% of the premium that I can collect at the money. But of course, I sold this damn thing at almost 50% out of the money, which means over the next month and a half, if MSTR is at 600 a share, these did amazing. And if I collect $2,000 a week for the next 6 weeks, that's $12,000. But I would miss out on like $150,000 of upside if we're at, if I'm collecting $2,000 a week here for 6 weeks, but I'm only collecting 500 a week here. I'm collecting much more premium at the money weekly, but I have much more upside for 45 days to expiration. So I'm doing a little bit of both. And to a certain extent, I like to split the difference and just be able to show both strategies for the videos. Back in March when I got wrecked, I was selling weeklies, but I was selling them about, let's see, from 1,200 to 1,400 is about 15 to 20% out of the money on the weeklies, and I still got wrecked. So then I was like, fuck it. If I'm going to sell weeklies and take a chance on getting wrecked, I might as well just collect a boatload of premium. So again, it's always trade-offs. No solutions, only trade-offs. That's my favorite economist, Thomas Sowell. David, yeah, I bought some 380s yesterday near the open on the downside dip. It worked out, but it rarely does. Better to sell calls Tuesday, in my opinion. Yeah, if we get some amazing Bitcoin action over the weekend, I will absolutely add some more. But I had to come up with 50 grand to get out of my margin usage. Sorry, that's the IRA. To get out of my margin usage. So I figured I would use some combination of exiting long call positions and opening new covered call positions and kind of split the difference there. You're welcome, Charlie. Nas says, thanks. How do ATMs affect you? Like when MSTR goes up and Sailor starts selling the shares? So the ATMs, when you say, how do they affect me? How do they affect my trading strategy? They mostly don't, except... Okay, so we got earnings in early February, which means that, let's see, I can't remember which day of the week it is, but let's just say it's the 4th. Then that means, let's see, 20 to 25, and then 27th through early February. So maybe starting next week, they're on the blackout period and they can't sell at the market. If that wasn't the case, I'd probably be all in on covered calls right now. I probably would have set up 20 to 30 covered calls today. But if we go into a blackout period and MSTR runs to 500 again, I want to, I guess it's kind of like having dry powder, right? If I cover all of my positions, then I don't have any dry powder to open new positions. So the ATM does affect me in that way, but it doesn't affect me in the sense that, oh shit, the price is down. They must be at the ATM. And then I get all pissed off and I'm like, why is MicroStrategy executing the exact strategy that they said that they were going to execute? Because I want you to pump my bags week after week. Because the point is the ATM is the bag pumping. So it's literally increasing Bitcoin per share, right? But, and I can't remember who covered it. My bad. I want to give credit, but it's, some combination of Jeff, Dan, and Ben probably have said it multiple times, but the the ATM is reducing their leverage, which gives them the freedom to go out and sell more convertible bonds. So, with interest rates coming down and things like that, the convertible bond market is going to be much more appetizing. So it's kind of like it's very synergistic. Some people were pissed off, oh, 21 and 21, but he's used up over half of his ATM usage in a couple of months, but he hasn't touched the convertible bonds. Like, dude, there's fucking reasons for this shit. They were selling at the ATM when that was advantageous. That's lowering the leverage that they have. So now they have the freedom to go out and add more leverage with the convertible bonds at the point of time when the convertible bonds offerings are most accretive. So like the ATM was kind of a springboard for the convertible bonds. But yeah, and that's another reason why I'm not buying calls for next week, because, you know, what if they're out there at the ATM? I mean, technically, I'm thinking the blackout period should start next week, but I don't know. I don't think it's a law, right? I think it's just a standard, like 2 weeks is standard. But if they don't have their earnings call until Friday of that first week in February, they might be able to sell ATM Tuesday, Wednesday, Thursday. Like, is it literally 14 calendar days? I don't know how that shit works. So, um, yes, it's kind of in the back of my mind and maybe giving me a little bit of hesitation to go all in, a stock going up 20% in a week, that would be cause for me to just jump into a bunch of these. Ivy rank's not even over 50, so maybe that's a little bit of an exaggeration that I'd go all in. But instead of setting up 10 covered calls, I might have set up 20. But I already had 18 of them on anyway, so. Oh, Jeremy says Josh just bought weeklies. The party is back on. No shit. I'm gonna have to check out his account, see what he's talking about. I've got another 3.5 hours before the market's over. Maybe I'll YOLO after all. Dudeface says the tasty trade rule is based on the SPY. MSTR is so far away from the SPY in comparison. I wonder if it needs its own model. So you're talking about the 45 days to expiration research that they did? Yeah, that's possible. Yeah, maybe all the models are getting broken. And I should probably be clear about that. So, and that's why I always say per Tasty Trades research, right? So I am assuming that their research is correct. And so I am executing a strategy making an assumption, and my assumption could be wrong. So I could be talking about 7 DTE and 45 DTE and all of this happy horseshit, and it could all be wrong. However, the stuff that I said about selling puts and covered calls a year out, that is absolutely correct. I mean, that is just literally demonstratable because you can just go to the options chain in frickin' January of 2027 and you can look how tiny the theta is compared to the size of the options price. So this is verifiably true that leaps have tiny theta. They don't look good in a speedo. And short dated options have big theta energy. So whether the optimal theta curve, they're correct about the optimal curve at 45 DTE and lasting for 2 to 3 weeks. I don't know if that's exactly true. Um, you know, for MSTR, maybe it's at 52 days of expiration. Maybe it's at 30 days of expiration. I don't know. I'm using Tasty Trade as my base assumption. And, they've made me a bunch of money over the years. So until someone does a theta curve study on MicroStrategy, uh, that's what I'm going with. Dude Face says the Jesse only issue is when Robinhood takes away margin ability on MSTY, which eSmart Trade did. Interesting. Yeah, I tried to buy some MSTY thinking maybe they would give me some margin credit. They wouldn't let me buy any more MicroStrategy at one point because I had a concentration risk. I had like 90% of my portfolio in MicroStrategy, and it kind of pissed me off. But now that I'm not using margin, I don't care about them. They can't say shit about it. So now I have 100% of this account in MSTR. And I just sleep better at night without the margin. I think I was using margin responsibly, but I didn't realize when I exited those positions and didn't have margin, and I felt so good about it. Like as soon as I got myself out of margin use, it was like a weight off my shoulders, and I was like, "Holy shit, I didn't realize that it was mentally and emotionally affecting me the way that it did." Because I thought I was being pretty safe, quote unquote safe with my margin use. Um, but once I stopped using it, I just felt so much better. Dr. Tone, or is that Tony? You can correct my pronunciation. In Canada, our RRSP is protected from taxes, including dividends. I think that's your Roth. It's a traditional IRA. I've been wondering if I should get into a Roth or not. I kind of hate that my money is locked up, and even when I turn, I don't know how the what's it called, disbursements? I don't even know how those work. It just kind of feel like money that I can't do anything with, so that kind of pisses me off. Barney says some ordinary income, some is qualified, depends on the fund, but does count for income when applying for loans, etc., treated similar to W-2. Yeah, and I was taking some profits at the end of last year because since I quit my job and I'm just doing this for a living, I'm like, you know what? I need some income on my my 2024 taxes so that if I apply for a fucking house, that I can just say, yeah, I don't have a W-2, but here's my taxes and I made some money, so please give me a loan. Second cookie. What about selling a 1-year MSTR put 1080? You get 72,000 in premium. Where is the risk? So the risk is like any long position. The price of MicroStrategy could be at zero tomorrow. So it's always got the normal risk. But again, you're not going to be able to realize the premium because theta is so small. So it's no riskier than taking any long position. You could argue that it's less risky because your cost basis on the 1080 would be lowered by $72,000. So down to, good Lord, would be down to like 360 or something. But you can just buy the shares. Yeah, I don't know. Uh, Selling beyond 45 days to expiration doesn't make any sense to me because I mean, unless you literally need $70,000, okay. But the other thing that doesn't make sense is if we're not in like on a cash account, if you're selling a 1080, that means you got to put up $108,000 of collateral to collect 72,000 in premium. So, okay, that's cool. You get $72,000 of buying power in your account, but you just locked up 108,000. So, and you and the point is, what's the return on capital? You get paid $72,000 on a $100,000 investment. That's great. Holy shit, that's amazing returns. But you have to wait a whole ass year to get it. But if you sold a cash secured put at the money every week, you can get 2 grand off of a $40,000 in collateral. And you can do that every single week for 52 weeks. So $40,000 in collateral, and you can collect $100,000 in premiums in a year. And you're talking about putting up $100,000 in collateral and only collecting $70,000 in premium for the year. So it's not risky. It's just not a great return on capital. Yeah, chicks dig the long vol. 10% dividend on MSTY. I thought it was around 2 to 4%. From what I've seen, they've been giving out pretty close to 10%. Somebody can clear that up, but I thought it was 10% ish. Scott says dividends are treated as short-term cap gains. Higby says I did the quick hit like Josh mentioned, bought 50 at the money January 17th calls at the market open. Sold them when it went 130% in profit at 11:30. No shit. Very nice. Jeremy says the technical term is destroyed. Yeah. Roth, you can always take out your principal tax and penalty free. Yeah, and that's why I've been thinking about converting. I guess I would just have to eat the penalty now, right? Hermes, your ears must have been burning because someone asked about the point 0.1 to 0.15 deltas earlier, and I'm completely agnostic about the delta. I don't care if the delta is point 0.1, point 0.2, point 0.3. I don't think there's any theoretical advantage in any of the deltas. I just try to, if Tasty Trades' research is correct, and um, they claim that theta is at its maximum acceleration at around 45 days to expiration, and that lasts about 2 to 3 weeks, so down to about 21 to what, 3 weeks from 45 is 24? Yeah, so I don't know, 24, 21, 24, 25 days to expiration, something around those lines. You will have extracted a maximal portion of what you sold it for, and then you can just roll back out to 45. So, I think selling at 30 is missing out on 45 to 30. So you're missing out on 2 weeks of what Tasty Trade says is the best theta curve. So if I'm gonna sell the point ones, I'm still gonna do it at 45 days and then try to roll every 2 to 3 weeks. Um, yeah. I'm trying to take advantage of that edge, if you wanna call it an edge, but it's a mechanical one. It's not a theoretical one. So I I don't really have any partial I'm not partial to delta, right? The 710, these are all priced exactly the way that they're supposed to be, right? You can get 600 bucks, 650 at point one. You can get double that at point two with much less upside. And those are all fair. You can sell the point one, the point two, but I prefer to sell them at, according to my assumptions, I'm assuming that Tasty Trade is correct, and maybe they're not, but whatever delta I'm picking, if it's an out of the money option, I'm selling at 45. But I know I've been following your trades, and you said it's been working out great for you. So if your account's going up and to the right, then I can't complain. Um, Tasty Trade, I don't think has done any analysis on tickers that have perpetually high IVs over 100. Uh, Probably not, but we can see what passes the sniff test, right? So at 100 days, 180 days, if I go out to the point one, shit, I can't even get a point one. All right. But the point one, two, or the 0.25, the 1080s. All right, let me see if I can get a freaking, what about 90? Can I get a point one at 90? No. March. There we go. Okay, point one is anywhere between like 1040 and 1080 range. And the price, let's just do a 10. The first point one here available. So the 10, let's do 1050. It's an even number. 1050 is a point one, and we can get 900, a little over 900 for it. Cut another month off of that. What did I say? 1050s? Motherfucker. Okay, so there's no 1050s in February. Okay, so this doesn't work. But yeah, it passes the sniff test for me, right? We go out to 180 days. Theta is only 30. June, it's up to 32, but it's inching up. April's the one that doesn't have 1080s, right? Oh no, they did have 1080s. It's inching up again. 30, 32, 36. March. March is 33. That doesn't seem right. Then February. Yeah, I can't get the 1080s there. Uh, let's see, what's February? This is the monthly. Might be easier to just look at the price. It's kind of a pain in the ass because I'm not able to use apples to apples and find the exact same strikes for every single week. Maybe if I don't go so far out of the money. Maybe if I go to like the 600 strike or something. Anyway. David says Nith gives me confidence to do covered calls again. Um, yeah. Sometimes watching this channel is more about figuring out what not to do, but we shall see. I do like the way that I'm covering my short positions with leveraged long positions. But let me just see if I can figure this out again. So let me just go just out of the money. How far can I go out when I still have weeklies? Okay, so the farthest one that I can do, let's go to 60 days of expiration. So I won't go to the top of the chain. Let me just go to the 600 strike. That should be available everywhere. The 600 strike in March is worth 3 grand. And if I skip the February 28th because it's only 3 weeks and I go a month, the 600 strike is worth half of that. So in 1 month, the value of the option got cut in half. That's a hell of a lot faster than, if we look at January 26th, the 600 strike is 110,000, excuse me, 11,000, excuse me. And going 1 month back to December, the 600 strike only drops by 5,000. It doesn't drop from 11,000 to 5,500. So it may not be exact with a high IV stock, but to a certain extent, it doesn't matter. We know that out beyond, 90 days, 180 days, theta is very slow and it increases rapidly. So the only research that I have to go on is tasty trades. So maybe it's not perfect for every stock, but until somebody does some other research that I can have something better to go on, then I'll go with theirs. Um, I would pose the question back, like, what research shows that 30 days to expiration is optimal? If there is some, then that would be cool to check it out. All right, we're all caught up on the chat, and I haven't even made it to the IRA. So do I have things expiring today? Yes, I do. And I have no cash to roll them with. So I got to come up with like 5,800 here. Another 2,600. That's like 8,400. I'm gonna come up with 8 grand. That's crazy. So I can only get like 2 grand at the money, right? So that's only gonna give me about 4 grand. So I'm 4,000 short. So maybe I will close one of these Decembers. That will give me 11,000 to play with. Well, hold up. I'm trying to sell 4 of them? No, I'm trying to sell 1. Can we get a fill up in here? All right, that gives me some cash to play with. So let me turn around and close these positions. Okay, sweet. We got fills. All right, that gives me 2 grand to play with. Plus, I will be opening up another covered call position. Oh shit, I skipped the IRA. Damn it. I skipped the IRA and went to the joint account. Fuck me. All right. But it still had to be done. But since this is a margin account, I didn't have to peel this off to sell the other to close the other ones, but it's fine. This kind of cleans me up anyway. So I've got 100 shares. I've got 1 leaps. That means I can sell 2 covered calls. So let me go ahead and sell 1 at the money. And I'll do 1 45 days to expiration again. I'll sell the 400. And where was I at before? Was that like the 580? Let's do 550. All right, that gives me 6,400 to play with. The price is up, so I'm not inclined to add any more leverage. So how many shares can I get with 6,400? Let's do 10 gets me to almost 4,000. So 15, maybe 16. Oh, more than 16, 20. Okay, so now I'm using margin again. I thought it was, yeah. Okay. Let me sell 2 shares. Is it 2? 2 gonna cut it? No, more like 4. I was right to begin the first time. Maybe the cash hadn't settled. I don't know what the hell I'm doing here. Okay, there we go. That works better. Let me just double check. All right, I increased my share count. So I only have really 23 shares uncovered, but I've got 3 out of the money leaps still. I have positive theta, so that's good news. I should have checked that on my main account. Yeah, big time positive. So that's cool. The IRA that I tried to skip, this is the one that I'm gonna have to sell something to even be able to close these bad boys. What am I gonna need? I'm gonna need 10,000. I'm gonna need 12,400 in cash to close these. I don't have any Aprils that I need to roll, but I might as well sell the Junes, and then maybe I'll roll these 3. If I roll these 3 calls, I should be able to get about 6 grand. So the other 6 grand I need to get off of to get here. Let's close 2 of them. All right, the 340s. Let's roll expirations out to 124. Let's do the 400 strikes. Oh, what? Why is that going to cost me? Reduce my buying power by 20,000. Oh, because it's just over. Okay, annoying. It's just over my buying power. So I might have to roll the other one to a different strike or something. Let's see. Let me roll this one. Roll expirations, 124. Again, I'll roll this to 400 for a small. Okay. Why are they kicking me in the balls here? I have 300 shares and I've got 2 leaps, so I should be able to sell 5. Oh, maybe. Interesting. Okay, let me just close this one. Maybe they're not giving me credit for this ratio spread here anymore. I've already got four covered calls. So yeah, I should be able to roll this one. Oh, because maybe I had 6. All right, let's roll this one. What's my balance? Yeah, I need to probably sell another. Yeah, let's sell another June. Let's see if this lets me roll. Okay. I might have been trying to put on too many positions for the amount of delta that I had. 300 shares, 2 leaps. I should be able to sell 5 covered calls, no problem. And I have on 5. So maybe I was trying to put on 6. All right, how much cash do I got? Got 350 bucks. That is not enough to even buy a share. So, should I take profits on any other of these leveraged positions? You know what? This is the account that I'm going to just blow up and take to MSTY anyway. So yeah, never mind. It doesn't even matter. All right, my allowance. I don't have anything that expires today. This covered calls upside down, but I can literally just sit on my hands and do nothing for 42 days. There's no cash, so nothing for me to do here. All right, the 5K account challenge. I'm happy this is back up over 20 grand. That's pretty cool. I was trying to get my 5K account up to 25K in like, I don't know, like 4 or 5 years. I thought was fair. um, and I already did that last year. It was up to 30. Didn't stay there. But all right, so do I just keep running the wheel and I let all of these CLSKs get called away? Maybe I'll just do that. Same thing with the Riot 13 and a halves. Maybe I'll just let those get called away. I could roll them for a credit, but I think I'll just wait until Monday. And see what, or not Monday, Tuesday, and see what happens. But yeah, all this stuff's getting called away. So this is in true wheel fashion. These will all just get called away. I could close them or just roll them, but we'll see what happens. Maybe I'll just recalibrate on Tuesday. And then I've got this weird poor man's covered call. Now that I think about it, I do need to roll this. You know what? I'll wait until Tuesday. I'll have a shitload of cash from all of these mining positions that will get called away. And depending on how MicroStrategy opens, I need to renegotiate this April long call. What did I buy it for? 1100. So this is basically 5x'd. And it's not particularly suited very well to selling covered calls on because it's not even in the money and it's definitely not a leaps and I won't be able to afford one in this account. So no matter what I do, I'm going to be taking some risks. And the whole point of this account was to show what you can do without a MicroStrategy and still try to make money with all these mining stocks. So maybe I'll even on Tuesday, I'll figure out what I want to do because there's some other companies that aren't miners that have options as well. So it might be fun to do a similar. They don't have weeklies, but I could sell it, 30 to 45 days and then just roll it every month. What's the other one? Cooler. They even have, I think they have monthly options. This is super cheap. Oh God, this would be kind of rough to try to even collect premiums on. But it's doable. Yeah, maybe I'll take a look at Semler on Tuesday. Let all these miners get called away, and then I'll recalibrate my positions. Um, so Hermie says check cooler for high IV, and it probably is, but it's probably so high that it's not reflecting in the IV rank, like because that's going back for a year. So yeah, cooler's baseline is 100. Oh God. So when it spikes, it's going up to 260, 300. Yeah, that's pretty ridiculous. So something like a cooler might be fun. I try not to trade anything under $10 a share-ish because it's even though the premiums are good relative to the price, like, I can't get weeklies anyway. But yeah, um, 10% premium, 35 days is pretty legit. So if I was on a super like $500 account, like I might actually do something like this. But all right, we're all caught up on the chats. All the trades are done. Appreciate